Hello everybody, this is Toni Turner and welcome to the market now as of about 11:30 a.m. Eastern on Friday, November the 18th. Before we start, please know that all of us at ToniTurner.com and TrendStar Trading Group wish all of you a very happy Thanksgiving. And now on to the markets. The Nasdaq hit a record high today as tech stocks continued to recover, while the Dow and the S&P 500 are hovering near their all-time highs. Federal Reserve Chair Janet Yellen said on Thursday the central bank could raise interest rates relatively soon, sending out a clear signal for a December move. According to Thomson Reuters, traders are pricing in an 83% chance of a December rate hike. Now, U.S. stocks have soared since Donald Trump's surprise victory in the presidential election last week, as his proposals to increase infrastructure spending and reduce taxes are seen benefiting the economy. The rally has been consolidating this week as investors wait for more news on the transition and look forward to or look at the aforementioned rate decision. And now let's look at three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a chart of the S&P 500 Spider Benchmark Index, and this is the ETF, symbol SPY, that closely follows our benchmark index. Now, as you see today when I captured this chart, the SPY was trading at $218.48, or right around $21.84 on the S&P 500 itself. It is trading at quite a discount to its major moving averages, a major premium, to its major moving averages. The 50-day moving average here is green, the 20-day moving average is red, and the 200-day moving average is black. These are all simple moving averages. Now, as we know, the SPY made an all-time closing high on August 15th of $219.50, and we refer to this as we look at the path the SPY has been taking, especially recently. Now, this is a pretty strong move up here. It sort of burst out of the gate like it's on a sugar high, the SPY did, and never looked back, at least not so far. There was very little consolidation in this move. We do see that the RSI totally agreed with it, and now the RSI is getting close to its overbought mark, which would come in at 70. It's not there yet, however. The MACD has jumped right above its signal line. The black line is above the signal line. They're both above zero. Those are both bullish calls. The only thing I see here that makes me wonder if maybe a little profit taking could come here in the coming week is that volume is decreasing. Volume is decreasing even as the index rises higher. And of course, we are trading right at this all-time high. So in the coming week, it makes me wonder if potentially, as we look forward to the rate hike and other events going on, if there will be some profit taking in here, maybe just in the short term. Now, of course, we have support here at 217 or 2170 on down to 216, certainly at 214 or 2140, and that's approximately where the 50-day moving average is coming in. We also see the 20-day moving average is crossing above, or it wants to cross above the 50-day. That is a slightly bullish signal as well. And of course, there's more support down at 212, which would be 2020, and we know that was June highs. So there's quite a lot of potential support here. As we remember, the three most profitable trading months of the year on a seasonality basis are usually November, December, and January. So if we can keep this momentum moving higher, if the bulls keep on buying, or at least if the market pulls back slightly and then they come back in, perhaps this index can stay above 2014 or 2140 as we move toward the Christmas holidays. If it comes down and falls below the 50-day moving average, then we need to get more conservative. But if it can stay above this 2140 line, perhaps we'll have a very Merry Christmas and holiday season. So we're in wait and see mode. We're going to have to look and see if any pullback comes in on higher volume, then I will get more conservative right away. Our next chart today is one I thought you might be interested in seeing. We don't talk about it because we usually use the NASDAQ 100 exchange traded fund or index. But this is the index today that made the new all-time high. This is the NASDAQ Composite. I thought you'd be interested, a little cocktail conversation here. For those who don't know, NASDAQ is an acronym. It stands for National Association of Security Dealers Automatic System. And this is the world's second largest stock exchange. It's based on market capitalization. It has about 3,800 equities in it. And it is where most technology stocks reside. Now we can see that the all-time high, the prior all-time high, and I remember being in a trading room in New York when it happened, the all-time high prior was an intra-month high at 51.32 back in February of March, I should say, of 2000. Now it's trading, as I captured this chart, at 53.33. On this chart, I've plotted the 30-month moving average. This is a nice all-around moving average you can plot on your monthly charts that will give you a good perspective of whether the trend is strong to the upside or the downside or sideways. You can see how this 30-month moving average acted as a very nice trend line back in 2004, 2007. And then, of course, when price fell through that, we remember the bear market of 2008. A lot of investors use the 30-month moving average as a signal as to where to be in and where to get out of the market. So we're looking at this composite. We can see here again that it's trading at 53.33 today. And what I'm going to watch here and see if it can stay above. It's in a nice trend line here on a monthly chart. If it can stay in this upward trend here, potentially it could move higher up into 5,500 and more. However, what I'm looking at here that's making me kind of hesitate here is that this is a longer term chart, a monthly chart, of course. The RSI here is making a bearish divergence. The RSI is saying, even though the NASDAQ Composite is making higher highs, I'm making lower highs. I'm not impressed with this move. So the RSI sees something in the NASDAQ Composite that is making it hesitate and not giving it a bullish signal. The MACD is doing the same thing. I don't know if you can see here over the volume spikes, but the MACD line, the black line, is trading beneath its red signal line. And that is a very slight negative. So both of these indicators are saying we're not as impressed with this NASDAQ move as price shows. This is not going to make me run out and sell my NASDAQ stocks by any stretch, but it is something that I'm kind of keeping at my elbow as perhaps making me, if I take on more tech stocks, maybe I'm buying less share size and I'm making very sure I know where my stops are. The final chart we're looking at today is the VanEck Vectors Agribusiness ETF, symbol MOO. Now the MOO, the top components in it are Monsanto, Deere, Archer Daniels Midland, Tyson Foods, Agrium, stocks like that. This is an international ETF. We can see here that when I captured this chart, it was trading at $50.12, just above its 20-day and 50-day moving averages. On September 6th, it moved up to $51.36. It dropped after that and then has been consolidating between 49 and 50, and then popped up to 51 last week, but has settled back down here to trading just above the 20 and 50-day moving average and above its 200-day. These are all bullish signs. Now, I chose the MOO for a couple of reasons, and one other thing came in. As I looked at charts of exchange-traded funds today, many of them have risen dramatically. They're overbought. I'm not interested in getting it at the highs, and others of them have fallen very hard, and I'm not interested in locating the lows right now. MOO has gone along sideways, kind of ignoring the trends in the broader market. I think some of these companies are ready to prosper, but I'm still very conservative going into next week. If the MOO can stay above its 50-day moving average, which comes in now at $49.68 right here, if it can stay above that as we move into the coming week, I'm going to watch it. If it can move up to $50.50, and maybe volume gets a little stronger, then it's something that I would like to look at as being attractive. This is not a day trading stock. It doesn't have the volume for that. So I'll be keeping an eye on the MOO, again, as long as it can stay above the 50-day moving average. Now we'll go on to next week's economic reports. But first, please join us on Monday, November 21st, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The session is made available to all of our members just a few minutes after the session ends. You can go to tonysmarketclub.com. And for the coming week's economic reports, nothing much on Monday. On Tuesday, we have existing home sales. Wednesday, we have durable orders, Michigan sentiment, new home sales, crude inventories, and the FOMC minutes. We have all of that packed into one day because on Thursday, the market is closed for Thanksgiving. Friday, we have a shortened day. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.